Imagine it's 2014 and you're running a small startup in India. Your product is ready, your website is live, but the moment you try to accept payments online, you hit a wall. Banks and legacy gateways like BillDesk or CC Avenue bury you in under 20-page forms, cancel check requests, and weeks of waiting. And even after all that, half of your payments fail because OTP servers crash during peak hours. That was the state of online payments in India. Not just slow, they were unreliable, expensive, and designed for big corporations. That's when two IIT Roorkee graduates, Harshal Mathur and Shashank Kumar, asked a simple question. Why can't online transactions be as easy as signing up on Facebook? And that's how Razorpay was born. A moat is what differentiates your startup from the competition. It's things about your business that cannot be copied. Maybe it's a supply chain advantage, a killer content engine, or a founder market obsession that's impossible to copy. Great startups don't just build products, they build moats. And we're here to break them down. Welcome to What's Your Moat, where we unpack what makes India's most breakout brands hard to replicate. During the early years, Razorpay's instant onboarding was anything but instant behind the scenes. While merchants enjoy the luxury of convenience and speed, the founders were busy hand-couriering documents to banks and debugging merchants' code over WhatsApp at midnight. That "we'll make it work" mindset established Razorpay apart right from day one. Today, Razorpay isn't just a payments platform. It's a $7.5 billion fintech giant powering over 10 million businesses. From Zomato to Swiggy to thousands of D2C brands, together, they process more than 10 billion transactions in a single year. In today's episode, we unpack the three key moats that helped Razorpay redefine how India moves money online in just less than a decade. Let's dive right in. Moat number one, all-in-one product suite. Back in 2014, most payment companies in India solved just one problem: money collection. You'd swipe a card or do a bank transfer and the money came in and that was it. But if you were running a business, you knew the requirements went far beyond just collections. You had to pay vendors, run payroll for employees, reconcile accounts, file GST and TDS, and sometimes even borrow money when cash flow was tight. Each of these sat in silos handled separately by outdated banks that were slow, paper-heavy, and anything but startup-friendly. Razorpay noticed and started with collections at first, via cards, wallets, UPI, net banking, BNPL, and even international payments. They went a step further and built Razorpay X, a neobank for businesses. Suddenly, a founder could open a current account, pay salaries, file taxes, and manage vendor payouts, all from the same dashboard they used to collect payments. But they didn't just stop here. With Razorpay Capital, SMEs could now access instant working capital loans, pre-approved using their own transaction data from Razorpay. No lengthy paperwork or waiting weeks for a bank manager's approval. And for India's booming D2C brands, they rolled out Magic Checkout, an Amazon-style one-click checkout that reduced cart abandonment rates by up to 30%. But they didn't just stop at online payments. By 2021, Razorpay realized that a huge chunk of India's economy still ran offline. Think kirana stores, restaurants, and small retailers. If they wanted to be the default money movement engine, they couldn't ignore that. So in 2022, they acquired EasyTap, the company behind those swipe machines you see at malls and shops. Overnight, Razorpay went from being an online startup tool to powering offline payments as well. But payments don't end at swiping a card. Each shopkeeper then has to generate a bill or receipt, and most of that was still paper-based. To solve that, Razorpay bought BillMe, a digital receipts company. Now, whether you're a D2C brand or a kirana store, Razorpay could cover not just the transaction, but the customer's proof of purchase too. The result? Razorpay transformed from a payment gateway into a money movement engine. Businesses collect, move, manage, and borrow money all in one place. Once your payroll, vendor payouts, and even loans are tied to Razorpay's ecosystem, switching is nearly impossible, and their retention rate proves that. With a net retention rate of almost 94%, merchants swear by Razorpay for every step of the way. Moat number two, deep localization. Globally, the gold standard for online payments is Stripe. It's the platform that powers giants like Amazon, Shopify, and millions of startups across the US and Europe. With Stripe, you can integrate payments into your website in minutes, accept cards from anywhere, and settle money seamlessly. But here's the thing. Stripe works beautifully in the US, but try to bring it to India and it fails. Why? Because the rules of the game here are completely different. In the US, cards dominate digital payments. In India, it's UPI, which powers more than 85% of all transactions. And by law, UPI charges zero merchant discount rate, meaning Razorpay can't just make money the same way Stripe does. Now, compliance is another reason. In the US, regulations are predictable. In India, the RBI drops sweeping mandates overnight, like when RBI suddenly rolled out the card tokenization mandate, most merchants froze. It meant every stored card would stop working unless systems were rebuilt from scratch. For a small startup, that could mean losing the revenue overnight. But Razorpay stepped in with Token HQ, a feature that automatically converts sensitive card numbers into secure tokens and manages them with partner banks. Merchants stayed compliant and transactions kept flowing without rewriting a single line of code. In India, another huge challenge is failed payments. Banks here aren't built for the kind of peak loads that festivals, flash sales, or IPL seasons bring. During those spikes, OTP servers crash, transactions hang, and customers drop off. And for a business, that means lost revenue and frustrated buyers. That's where Ray came in, the AI-based router. Every time you hit pay, Ray decides in real time which bank is most likely to succeed. If HDFC's OTP server is slowing down, it instantly reroutes to ICICI. This happens in milliseconds, invisible to you, but it's the reason why Razorpay achieves 95% plus success rates, while others struggle at around 80%. Now, apart from compliance challenges and failed payments, there's another big reason why India is different: scams and fraud. Did you know that India loses over 1,500 crores due to online payment frauds every year? To tackle this, Razorpay built Shield, the fraud detection engine. Instead of just blocking suspicious cards, it goes deeper, tracking device fingerprints, IP addresses, and even unusual user behavior to flag threats in real time. The result? Fraud attempts get stopped before they rain money, protecting both merchants and customers. Where Stripe, Aiden, or PayPal struggled to adapt to India's messy payment rails, Razorpay turned those blockages into strengths. And the best part? It does all of this without breaking under India's messy infra enabling startups and SMEs to sell with confidence from metro cities to the smallest towns. Moat number 3, developer-friendly integration. Ask any Indian founder why they went with Razorpay, and the answer often starts with just 4 words. The integration just worked. Before Razorpay, integrating a payment gateway felt like a nightmare. Legacy players had old-fashioned APIs, PDF-based documentation, and onboarding that would take weeks. For a young founder, building their first app and then integrating payments to it often felt like an impossible task. Razorpay made integration as simple as a single line of code. To make it even easier, they built SDKs for iOS, Android, React Native, and Flutter. So no matter what platform you were building on, you could plug Razorpay in quickly. For e-commerce businesses, the ready-made plugins for Shopify, WooCommerce, and Magento made payments easy enough to set up in just a few hours instead of weeks. And for developers who wanted to test before launch, Razorpay offered a full sandbox environment, a dummy version of the real payment system where businesses can try out integrations, run sample transactions with fake money, and check for errors, all without touching real customer payments. But the real differentiator wasn't just the tools, it was the culture. In the early days, Harshil and Shashank personally joined WhatsApp and Facebook developer groups, answering questions, debugging code, and even writing fixes overnight. Startups didn't see Razorpay just as a vendor. They felt like the company was a part of the team, solving problems alongside them. That created a level of trust no marketing campaign could buy. This trust snowballed into a community-led adoption. Developers began recommending Razorpay to peers, and early startups recommended it in their circles. Word of mouth became Razorpay's most powerful distribution channel. Today, Razorpay powers over 10 million businesses, from freelancers and SMBs to unicorns like Zepto and Urban Company. More than 60 to 65% of merchants now use multiple Razorpay products, and by making payments integration simple and reliable, Razorpay lowered the barrier for thousands of Indian founders to launch their businesses. In a country where startups often run lean with tiny tech teams, this developer-first culture gave Razorpay an edge that no competitor has been able to replicate. Let's summarize. What makes Razorpay so hard to copy? A full-stack fintech suite that goes beyond payments, deeply localized infrastructure built for India's unique rails, rules, and risks, and a developer-first culture that turned trust and community into distribution. But these moats also come with trade-offs. Due to India's zero MDR policy on UPI, Razorpay doesn't make a single rupee on transactions made through UPI. Sudden RBI mandates force costly changes at scale, and compliance remains a constant moving target. At the same time, well-funded rivals like PayU, PhonePe, and even Stripe are doubling down on India. And while multi-product adoption and strong retention give Razorpay an edge, it also means that they're exposed to policy risks in India's volatile fintech landscape. The big question now is, can Razorpay keep compounding its advantages and truly become India's financial operating system? Or will the next wave of AI-native fintech challengers chip away at its moat?